Hello, this is the coach from winningstockcoach.com. Going to go over market overview for the upcoming week, which will actually begin on Tuesday, February 18th, due to Monday being President's Day, United States holiday, so the U.S. markets are closed. Just looking at the SPX chart, the S&P 500, looking at some potential. I want to show you some reoccurrences that we've seen. In the candle pattern, you know, the hammer candle that came off the trend line, we've seen that reversal off of both the other points that the reversal was made. We saw, you know, a large following candle following the hammer candle reversal, and we're seeing that. Now, we also saw some continuation, but slower continuation from it. And that's pretty much what I expect from, you know, this point going into really the first week of March. So though I think we could have some continuation to newer highs, I think that first week of March will be kind of the telltale sign for where we go overall market direction. But I don't necessarily think that, you know, we start skyrocketing and just going from where we left off this past Friday. You know, these size of moves, generally you'll get some prices below. I wouldn't be surprised in the least to see a slightly red market day either Tuesday or Wednesday of this week. Not that I think it'll have any real major and lasting effect. I just believe that we could see that on a daily chart. But as far as the week goes, I think we're going to get some slow, extended movement, probably leading us into the first week of March, going on with the S&P 500. Very, very similar here when we look at the DJI, our Dow Jones Industrial Average. Same type of candle and reversal pattern. We typically see this with the indices overall. You know, looking at it, this is one that I need to see a little more of how it opens on Tuesday to get a healthy projection for how I believe that the week could go. It's kind of a hit or miss stance for me right now. You see this little yellow line here on my chart. It's a 8 simple moving average on the weekly chart. And I believe that if we replicate patterns seen in the past, like this right here, that the Dow could have an incredible day, or incredible week, with a similar type open. You know, we saw the markets really rally this past week, and Dow stocks like Goldman Sachs kind of just holding off the bottom and not moving a lot. A burst like what I may be expecting in Goldman Sachs in the upcoming week or weeks could be exactly what it takes to make that push and continue. I think that after watching a lot of S&P 500 stocks this past week and the big rallies they had, and not as many of the Dow stocks grasping onto that, I just think it makes them more poised to be a higher priority to be watching in this upcoming week. The Russell 2000, you know, we saw small caps make a pretty nice rebound over the past couple weeks after some pretty hard failures of support that they had taken. Sad thing is, I really don't trust them right now, and I'm a big small cap fan. It's you know, that's kind of my bread and butter. I think that the top sides in your small caps are going to be a little more limited than in some of the bigger board stocks coming up over just the next couple weeks. And I think we have still some telltale items ahead of us as far as, you know, that global economic data that really, again, you know, just like I said with the S&P 500 chart, any movement we make, I think, is going to be contingent really with that first to second week of March, and give us a really good idea for market setups at that point in time. As far as intraday movements, now moving over to like a daily chart from the weekly charts we were previously discussing, the SPX, would not be surprised at all to see it hit up into that 1850-84 and give a little bit of a pullback. You know, I think the 1850 is a good touch in that area. A little pullback just to kind of get a feel, and you know, then on a subsequent move, really to see if it wants to break through to new highs, or if it's a little timid to do that after that big sell-off. But understand, with the size of the bounce that we had, it would not be uncommon whatsoever to see a little bit of a relaxing, a little bit of a pullback, or even a little bit of a flat, the horizontal consolidation movement over the first couple days of the week. Now the other thing is historically on shortened week, holiday weeks, like we're going to have this coming week, we do see a lot of the consolidation type movement, but generally we're given a pretty fair idea of that in that opening session after the holiday, the first day of that shortened week. So getting a look for the S&P 500, which is really my primary indicator that I use to guide most of my trading, I'm really interested to see the opening. I was quite pleased with what I saw in global markets that were open today, Monday the 17th, and even last night as they opened, and some of the futures, how they were presented. So not one to say that market's going to fall apart and this, that, and the other. I'm just not one to say we're going to have a big hard charging week like we just came off of, and that historical aspect of the holiday weeks and how they can generally bring less volume and whatnot into the markets, would not be surprised to see that continue and maybe give us a day or two of that consolidation type trading while we build support or even confirm resistances. The Dow Jones Industrial Average daily chart, it didn't make as much of a move. It's made a considerable move, but it already got a little bit of consolidation underway. Thursday or Wednesday and Thursday of the past week. I'm sorry, that's Wednesday and Thursday, before making a bit of a breakout move from that. I still wouldn't be surprised to see Tuesday, Wednesday be a good move on the Dow Jones Industrial Average, more of a catch-up type trade to the S&P 500, but I wouldn't necessarily bank on it if the S&P 500 were to perform poorly. If it just goes sideways, maybe a light down day, I think the Dow could make a nice a play off of that. And I would kind of enter the week with a focus more on some of the Dow stocks than some of the S&P 500 stocks that have already had such a hard charge. And then looking at the daily chart for the Russell 2000, not going to be surprised in the least, based on the candle pattern that we closed with on Friday, to see a little bit of that horizontal, the sideways movement, maybe even a slight retracement into the 1132 area. Kind of hard pressed to believe it would go that far, but maybe the 1139s where we could see some sideways movement. Probably just Tuesday, Wednesday, before a little bit of a bounce play Thursday, Friday, depending on its ability to hold up between that 1132 and 1139 in a consolidation. If we get some good trading for a couple days within those ranges, any break above those ranges subsequently would lead to a confirmation for some presence in the small caps. Kind of short and sweet this week as far as the market overview goes. We had a really nice market rally. Being a holiday week, we tend to see lower volume for the week being made. We do tend to see moves be lighter when they're made, but lesser volume, meaning more prone to consolidation. And a lot of verifications that'll need to be made as we start the week overall. So coming off this past week, I don't think anybody's in any danger with positions they're in. A lot of positions did really, really well. You might want to lighten the load on some of this short-term trading that you've done on these last bottoms. Lighten that load, trim them a little bit, if and only if you see the weakness present itself. But overall, coming off of those bottoms, any consolidation period wouldn't hurt you at all, and you should do pretty well with those trades that you're in. Like I've told people at the coaches roster with winningstockcoach.com, in our chat room, we've discussed a lot of things over the past few days, a lot of our webinars and normal training, and we always talk about trimming the positions and getting your money back. We call them free conversions, free share conversions, or even like free options contracts conversions. Recent trades, you see some of the government contractors, Lockheed Martin, that we had people take up to about 600% profit in options just this past week off of alerts that we made. Northrop Grumman was another big one, and Raytheon. And while those still may have some upside potential, don't ever be afraid to trim those positions that run exceptionally well to protect your profits, because they're not gains until they're realized gains. And that's something very, very important to instill. And there's a difference in whether your trade is planned to be a longer term investment, a shorter term swing trade, or even a day trade. And if you're in for those shorter term swing trades and you get those big of moves like we saw in the defense contractors over the past week, we definitely got to look at trimming down and taking advantage. Now this week, one thing that really has my focus, I think financials are going to be poised to make a move. From how they stand, you don't quite know yet if that'll be a top or bottom side move. From how they're looking to me, their trading pattern over the past week really developed a level where I would expect a good move out of the sector, but it truly, coming out of consolidation on many of them, could give a move to either direction. Options traders and whatnot should be prepared to play either side of that as a shorter term trade, even if it were to go down. And I think that could be poised to give some really good opportunities. I'm also very interested in some of the oil and gas stocks. I've alerted my members at the coaches roster with XOM, COP, CVX have made moves that we're in. I'm personally in XOM now, and we had an options play that's done phenomenally well, a couple 100% gains on that, and I've got the common shares as well that are doing phenomenal, and I'm actually expecting a little more movement out of those. I did take some profits on some metals, gold and silver. Took some profits there this past week. Those charts, if you're playing them on a day-to-day basis, those can be very gappy, the space between the close of the previous day, the open of the next day, and can get well overextended. I did not sell completely because they're kind of in breakout mode right now, and we're seeing that transcribed to a lot of mining stocks as well. A lot of those mining stocks are getting into those overextended territories. If you're in them and doing well in them, don't be afraid to protect yourself either by reducing your positions or the first sign of danger, first sign of weakness, maybe taking puts to kind of give you an insurance plan on your common shares. If it's a non-optionable security, definitely reduction would be the way to go. Keep yourself safe and just remember that it's not a gain until it's a realized gain. Now you could say it's not a loss until it's a realized loss, but you don't want to let things slip away from you too hard and get away from your trading plan. And always have a trading plan before you trade. This is the coach from WinningStockCoach.com. Best of luck to everybody in the upcoming trading week. And members of the coaches roster, I'll be with you every day, all day, during the trading hours and in the evenings in our chat room.